Hi, welcome to the Interaxis channel. Today we're going to talk about the different values of crypto tokens and how you as a financial advisor, if you're watching this, can look at the value of different crypto assets or tokens in the crypto world. Now, it's important to remember this particular video is in response to a question we got during one of our live sessions. Every Friday we do a live session with financial advisors where we talk about crypto, what's going on, analysis, talk about some of the news, talk about, most importantly, how it affects you as a financial advisor. And one of the questions we got was actually around a token called Filecoin, or a protocol called Filecoin, associated token FIL or File. And it was in response to an email newsletter from a friend of ours named Michael Nadeau, who writes the DeFi report. And he had a 2-day report on Filecoin. Now, I'm not going to talk about that valuation. I highly recommend people subscribe to the DeFi report and go read what Michael has to write, because he writes great analysis on crypto, DeFi, all this blockchain decentralized ecosystem. But what I want to talk about is how you as a financial advisor can look at the different value of different crypto assets. And hopefully you understand that different crypto assets are going to have different valuation techniques, different, fundamental valuations, different speculative valuations. And the way we're going to look at it is a little bit akin to how we would look at any sort of traditional asset. What do we think the value is going to be over time? And how is that going to accrue to whatever I own? And so first, what we want to look at when we talk about these different crypto assets is to understand what the project, protocol, infrastructure, whatever it is that the token represents. So if we're looking at the case of Bitcoin, and remember, little b Bitcoin is the cryptocurrency for the Bitcoin network. In this case, we're looking at different factors, like, do we think more people will start using the Bitcoin network? What do we think they'll be using it for? If we go to an investment thesis, like, I think more people will be using Bitcoin in the future because they'll want to transact, anywhere in the world, because they don't want the government telling them what to do with their money, because Bitcoin is highly decentralized, all of these things, there's wars going on, there's banks collapsing, all of this. I think more people would utilize the Bitcoin network, and then you go back and go, okay, what's the value? Where's the fundamental valuation there? And you go, okay, there's only ever going to be the number we talk about all the time, 21 million Bitcoin. And therefore, if all these people are using it, what do I think the value of those Bitcoin are going to be? That's some of the evaluation you can do. Now, it's important to note that that doesn't hold true for all crypto assets. They don't have that 21 million number. They don't necessarily have that same valuation. So we have to look at other assets and go, where do we think the value is going to be? If we look at the Ethereum network, and of course the symbol, the token ETH for Ether, we go, all right, the Ethereum network is going to continue to be adopted, right? We see companies like BlackRock, like Visa, like PayPal, like Shopify, all utilizing the Ethereum network for something, whether it's settlement, whether it's creating tokens to represent certain assets. They're looking at utilizing the Ethereum network. Okay, so if I think adoption, if I think use of the Ethereum network is going to go up, and again, I'm not saying it will, I'm saying if this is your investment thesis, if I think usage of the Ethereum network is going to go up, then I go, all right, that's great. If I've already evaluated that, the next step is, how does that translate into the value of the token? In this case, my theory might be, all right, I know that I need to use ETH to pay for gas in order to have my transactions run on the network. If there are more people using the network and more transactions, then there's going to be more demand. In the Ethereum network, you're paying for block space. You are paying to get your transaction memorialized on the Ethereum blockchain. And if there are more people that need their transaction memorialized, it's going to cost you a little bit more in order to get yours in there. Okay, you're paying for block space. Block space is at a premium. And therefore, if I think there's going to be more adoption, more transactions, more people using it, then in theory, I might think the price of ETH will go up. But then I also have to know about the issuance policy. So there's adoption of the network, there's how does it translate into the token, and then what's the issuance? Well, the issuance policy of ETH is such that every block, meaning every 12 to 13 seconds, more ETH is created to reward the validators, those that are processing the blocks, processing the transactions, and some ETH is burned based on the transactions that go into that block. So sometimes there will be more ETH created with every block, or more ETH in the world with every block, and sometimes there will be less. It will be inflationary and deflationary. So I have to know what's happening with the network and adoption. I have to know how that translates into the value of the token, and then I want to know the issuance policy. How many tokens are there? Who holds them? How are they being issued? Those are all going into understanding of the valuation of that token. And everyone's valuation is going to be a little bit different. And again, this is more of a fundamental valuation. I'm not talking about what happens if there's an, in the very short term, if there's an ETF and all of a sudden there's a greater demand because of that, which has very little to do with actual adoption of the network. So then I can look at other tokens like I mentioned Filecoin, another one that's been popular recently, Chainlink, maybe Solana. Okay, for something like Filecoin, you go in and realize, okay, Filecoin is all about being able to store data on chain, being able to store it on this interplanetary file system, and therefore I am using Filecoin tokens to pay for my space, pay for my data to be stored, much like right now I would store my data on Amazon Web Services or Google Cloud or something. Is this going to replace Google Cloud or Amazon Web Services? How much of it is going to replace what percentage? And therefore, if I think that adoption will go up, remember, I'll make a determination of adoption. How does that adoption translate into the value of the token? And then what is the issuance policy of the token? Meaning, if it translates to the point where I have to use this token as a utility to pay for something, meaning there might be more demand with more adoption, I also want to know how many tokens there are. Are they producing more of them? Did they already produce, or did they already mint a set number and then they're just going to release those over a time? I also want to know who holds them. If 5 people own 85% of the supply, I want to know that as well. Not because that'll necessarily negatively affect, but I want to know who holds them, and I want to know if they have any sort of lockup. Remember, this is blockchain technology. It's very transparent. I can probably see the wallet addresses of those people that hold most of the tokens, and therefore we'll know if they start selling, and we can see, based on the code in the smart contracts, if they are locked up for any period of time. Again, it's so transparent, we can usually see all that. The likes of Link, for instance, this is Chainlink. And Chainlink has recently created their cross-chain interoperability protocol. And what we have to look at, Chainlink has actually started out as an Oracle, so they're an Oracle provider, meaning they take off-chain data and move it on-chain. And now with their CCIP, they allow different chains to talk to each other and different financial organizations to talk to each other via the blockchain and to work together. So what I have to determine is, do I think there's an increasing market, an increasing adoption of the Link tokens? Do I think that will translate into the value of the token? Is there a demand for it? Do I think the demand will go up? And then I want to look at the issuance policy and say, how many Link tokens are there? Who controls them? Are they releasing more? Are they going to have to sell more? Do they have any sort of lockup on that? How much do I trust those people? All of those things. How many are at centralized exchanges and can be traded, sold, bought right away? How much liquidity is there? How many are locked up? Is there any sort of staking mechanism? Same for Solana. Solana is a smart contract chain, much like Ethereum, but it runs a lot faster. Transactions are a lot less expensive. However, it has a very different issuance policy than ETH. You have to look at that. Yes, there has been more adoption on smart contract chains as opposed to Link, which is a protocol mainly on top of Ethereum, but also on top of many other chains, as opposed to Filecoin. With Solana, what we look at often is how many builders are there? Who is building applications for these particular chains? Because more applications built on those, more builders, means theoretically more adoption, which means more transactions, which means maybe more demand. But again, you have to look at the issuance policy. You have to look at the ideas of staking. How am I creating more? What do I get if I invest in this? But as financial professionals, what we're going to see is, in theory, not all crypto assets should move up and should move down at the same time. We're going to start to have this time when they don't all move in sync, and therefore we're going to have to look on a case-by-case basis, just like we do theoretically for publicly traded companies. We look at Apple, Google, Amazon, Facebook, Nvidia, and even, companies like GE, and we go, what do we think they're going to make in terms of revenue in the future? How is that going to be impacted by expenses? What's going to happen to their profits? And then how is that going to flow through to the value of the stock? We're going to do the same things for tokens. It's just some of the data we're going to look at is different. Some of the metrics are different. Some of it is where we don't really know what the growth is going to be like, but maybe we just think it's going to grow. We think the adoption of Filecoin is going to grow, or we think the adoption of Chainlink, CCIP, the need for oracles is going to grow along with things like real-world assets, and therefore we don't just necessarily assume that the value of the Link tokens goes up. We have to go, okay, if the need for oracles grows, if the need for this CCIP grows, if more banks around the world adopt it, what does that do to the token? How does that affect the price of the token? And then how many tokens are there? And can I extrapolate from that a value for every token? Or do I just want to have an investment thesis that says, I don't know what the exact value of the token is, but I know that there's going to be more demand for it going forward because more people are going to need it to transact or need it to affect oracles or something to that effect. For many tokens, they are just governance tokens, right? So that means all I get with the token is I get to vote for what happens. There are very few tokens that allow me access or have some sort of claim on the treasury of that particular protocol, meaning many of these protocols have a treasury. It is stored, on chain, which I can see. I can go look and see what the treasury looks like for any one of these, but that doesn't mean that having the token gives me the right to any of those treasury assets. So I can't necessarily equate that. Sometimes it does, sometimes it doesn't. I have to look at some of the governance tokens and go, okay, do they give me any sort of rights to the treasury? Are there any fees accruing? Because some of the DeFi protocols, like a Uniswap, for instance, as more and more people are utilizing the decentralized exchange, it's extracting fees, but then I have to go, all right, do those fees accrue to the value of the token? And those are the kind of metric, that's what we're going to look at in the future as financial professionals in terms of the value of some of these tokens. Do I think the ecosystem is growing? Do I think there will be more growth for that particular project, protocol, application? Does it have any sort of moats around it? All the things we would look for in traditional companies. And then how does the value, how does that growth accrue to the value of the token? And then how many tokens are there? How do they get issued? When do they get issued? Who controls them? Are there any lockups, anything like that? So the value metrics, or the value of these tokens, is going to change. The metrics that we look at are going to change. Much of it is going to be extremely transparent, and the values are going to differentiate more and more from each other as we start to see more actual adoption and actual use cases for many of these protocols. So again, this came from a question we had in one of our live sessions, and I wanted to be able to address it a little bit on the whiteboard and help you as a financial advisor, if you're watching this, to understand that if you're subscribing to something like the DeFi report and it's going to go through this long analysis, much of the analysis is again going to be, is the protocol project company growing? How does that accrue to the value of the token? And then what is the issuance policy of the token? And from that, you get to make an educated assumption, guess, whatever it might be, as to where you think the value of that token should be. And then does it fit within your clients' portfolios?